We started the webinar with how we think now is an interesting time to invest. I'm curious to hear your perspective. If we believe that, then we think that's true. Why graph go down look like a knife? Why aren't people and other developers? There's a lot of great developers in the marketplace. Why don't they start projects?
Well, I mean, Payton certainly is, as you know, I mean, everyone's trying, right? But this is a market where it separates, those who are able to execute versus, those who can't. And I think that's the real difference. I mean, everybody's kind of showing similar things right now, but I think it's about having the right strategy and the ability to execute on that strategy to really make things happen at this point. The perception among investors out there today is that oftentimes it can be easier to or cheaper to buy than to build. But I think we're getting to a point where the market's starting to realize that, that's maybe true in theory, but it's harder to do in reality, particularly at scale. And so, I was talking to big brokerage groups recently, and they were sharing that they're seeing more capital interested in investment in development again, just because of the challenges of buying at any scale in this market, given the lack of supply in the market. And then also too, just kind of advancing forward here, as you look at where this is going in terms of supply, again, supply has been the biggest headwind. It's not been a demand issue, it's been supply. We're peaking on supply now, but you look at this forecast, I mean, this is really the bull case for development, which is showing you that by next year, we'll have fewer than 300,000 units completing in terms of apartments across the country. And that continues to decline in 2027. And so when you think about projects that start this year, they're completing 18, 24 months later. So at this point, you're probably looking at 2027. That's a low supplied environment at that point. And I like to remind people too, it's like, forecasting is a tough business, right? Like no one can predict the future, but supply is the easiest variable to forecast because it just starts being pushed forward. And as we showed you earlier, there's a lot fewer starts in the market right now. So I think that creates a real opportunity for those who are able to build because you're going to be dealing with a lot less lease-up competition at that point. And by the way, one other thing I want to share too, kind of on the bull case here, for really all types of development, but I think this is important for workforce housing too, is that, over these last 18 months, we've seen very little rent growth in the market. That's that blue line. But there's also, I think, a really encouraging narrative that's not getting enough discussion right now. And that's that we've seen more than 2 straight years of more wage growth than rent growth. And while obviously for apartment investors, seeing no rent growth for 18 months is not an ideal equation. A couple of things though. Number one, we had a 50-year high in supply, and the fact that nationally rents held flat, didn't get cut deeper than they did. And even individual market level, most individual markets like in DFW, for instance, were low single-digit rent cuts. That just speaks to the depth of demand. Now, the other part too of that is we've seen, again, 26 straight months of wages growing faster than rents. What that's doing is it's widening the demand funnel for apartments in terms of who can afford apartments. And that impacts all price points as well. And so it's a win for renters and a win for investors and developers to see that demand funnel widened. And so again, going forward, lesser supply, that should put upward pressure on rents. But we've had this period where we've essentially wiped out the blue hump here where rents grew faster than wages in 21 and first part of 2022. And that's going to put us in better position on for affordability as we get into 26 and 27, where with market rate renters paying 22, 23% of income on rent and that number going down, that will allow for affordability to more of a tailwind than a headwind over these next few years.